Hey traders, Akil here. Welcome back to another episode of The Trading Edge. This is a weekend edition, meaning it's up on YouTube, and meaning that we're doing the premiere feature where if you're with me live for the premiere, you can actually talk to me during the video over on the right-hand side of your screen and ask me questions about what's going on or even just participate in the community chat. It's a pretty cool feature that we started doing really with my last couple of videos. I just haven't done it in a while because, well, I haven't been here on YouTube in a while. Now, it's nothing against you guys. I've actually been pretty busy. I was over in London for the past week, had a nice trip with my family, my first vacation in about 5 years. So I really enjoyed that. And then on Saturday, I kicked it with my second family, which is the Tier 1 trading community at our Royal Ball. It was an amazing event. I'm still trying to figure out the words to kind of express it. But thank you to everyone that was there. It was great meeting you in the flesh, person to person, face to face, eye to eye. And for you guys that couldn't make it, hopefully you can attend next year. Matter of fact, if you watch till the end of this video, I'll throw in a pretty cool video that we recorded from the event. So you can kind of feel like you were there if you weren't able to make it. But what we're going to do in today's video is take a look at the euro dollar. And this was a trade that we've been tracking for a while. And by a while, I mean, my original prediction for the euro really started back in the summer, about late July, early August, where we talked about a big bearish opportunity. If you're a frequent viewer of my videos, you can actually go back on the YouTube channel and check it out. By the way, if you aren't subscribed, make sure you are. Hit that subscribe button. And if you want to get notified when my new videos are released and when these special premiere videos are released, make sure you hit that little bell icon on the subscribe menu or the subscribe button. That way you're notified. But we're looking at the euro dollar from a very long time ago, predicting a bearish move. And there were a few levels I had on my radar. One was the 113 level, which we smashed through. And the secondary levels were between 108 and 110, or 110 and 108. So today's, I want you to keep that in mind as we look at the chart today, because kind of that background knowledge, that confirmation bias in a positive sense is going to take place, or it's going to play a major role in the analysis that I show you. And let's start off by taking a look at the video that I put out this Tuesday for our Tier 1 members in our daily trading edge, taking a look at the initial setup for the euro dollar. Then I'm going to hop back in and show you how things have changed and show you how I'm going to look to take advantage of it for the trading week ahead. It is an interesting one that we talked about in the live room. And you can see what's happening on euro dollar is that price action is starting to contract, right? We are starting to coil in a way where our range is getting smaller and smaller. If we look at our move here from mid-November, right, our lows here, we can easily see that price action is putting in higher lows, right? We have initial or lowest low right here. The next low is higher. The next low is even higher. And we can do the same thing for the top. If we take our move here, again, early November, and we look at our highs, right? Our highs are getting lower and lower and lower. And this is the market contracting. Now, rule of thumb is in the market, right? Contraction leads to expansion. Contraction leads to expansion. I like to think of it as if I'm squeezing a spring, right? I opened up the pen. I took one of those small springs out. I'm squeezing it, squeezing it, squeezing it. And what happens when I let go? Boom, it expands. Now, this particular pattern formation is called a wedge pattern or a triangle pattern. It really doesn't matter what you want to call it. But the fact is that this pattern formation on its own doesn't really tell us to expect a bullish or a bearish breakout. So what we need to rely upon is our analysis of the market. And my analysis on the euro dollar really hasn't changed since late July, early August, right? If you guys remember, if we scrunch up our charts, we go all the way back to the bigger head and shoulders here on the daily. We predicted a move down to the 113 level, which was achieved, and then a lower level move down to the 110, 108 levels. And our most recent move here, right, is what? What has price recently done as we go through our IPDE process, identify, predict, decide, execute? Well, our most recent move was a lower low, lower close. You can see the candle, which is indicated by the pink arrow, has broken and closed below the previous VS1 level. That's the dynamic support and resistance that prints on our charts thanks to our VS1 indicator, giving us a lower low. After that, we have never violated the previous outside return, which would be at this line right here. Therefore, we can say that we are in a bullish move. So, because I have identified that we are in a bullish move, I am more likely to predict a breakout to the downside, to the upside. Now, this alone, for me at least, isn't enough to just say sell. We talked about it this morning. I don't want to just say sell and wait for it. I want to wait for confirmation. And there's a few ways to do so. The very conservative way is to wait for these lows to be violated. Obviously, that's going to take up most of the move. But if you are a breakout trader, what you're going to want to do is, and I am not a breakout trader, so I'm not a big trend liner person, so don't give me emails about the specifics of drawing trend lines. I'm not a big fan of them, to be honest with you, but people use them. What you want to do is you want to draw a trend line from your low right here to your low right here, and you can do one of two things. You can wait for the break and close of that trend line, involve yourself in a short position. I guess you can do one of three things, excuse me. You can wait for the breakout, break and close below this trend line, and involve yourself in a short position. You can put a sell stop order right here and involve yourself in the breakout, right, as it's taking place, if it takes place. Or you can wait for the confirmed breakout, that would be a break and close, wait for the retest, and then wait for a continuation down to previous structural lows and beyond. Those would be the three ways of trading it. And it doesn't mean that we're going to see it here. The market can continue to coil, right? But as long as we're putting in that series of higher lows on the bottom side, lower highs on the top side, we are within that triangle or within that wedge pattern. All right, so I hope you guys enjoyed that. Give you a little background information of what I was looking at. And if you like those Trading Edge videos and you want that every day, make sure you sign up on our site. We have a trial membership. It costs $1. It gives you 14 days on the website. You can take advantage of the daily Trading Edge videos, access to London and the New York live trading room, access to our great community of traders, and access to our software such as Enigma and VS1. So you get a lot for a buck. Check it out. Even if you're joining during kind of the holiday break, there are so many live rooms that are archived. There are so many accountability sessions, so many Trading Edge videos that are archived that you can spend those 2 weeks just going through the past episodes and learning that way while still participating with the community network on the chat. But loading up the euro dollar right now, let's go up to really the daily chart. And I'm going to show you kind of what has changed here. And let's just redraw out, let's get rid of these VS1s here. Let's redraw out what we've done, right? So here is our initial wedge pattern, boom. And you can see that today we haven't technically broken out. There's still about, I would say trading day is over. It's about 1:30 my time, but maybe a few more hours left of movement, but most likely we're gonna break below and close below this trend line. Today's been a kind of a weird day. We had some really positive retail sales out for the dollar. We had Draghi speaking yesterday saying he was, they announced the official end of the quantitative easing, which was expected. But then he made some comments about the future, and he said that he said he was cautiously confident, something of that sort, which is kind of like an oxymoron, cautiously confident. I don't know. But I don't think it was interpreted very well, which is why we're seeing kind of a combination of dollar strength and euro weakness. Now, so we have that break. And remember in the video, we talked about two things, right? A breakout trader can get involved during the break, or you can look to get involved after the break. And if you're someone looking to get involved after the break, you're going to look for what we call a break and a pullback, right? And what that means is you're looking for the official breakout, and then you're looking for price action to put in a retracement, aka a pullback, back into the trend line, back into structure, wherever you have, wherever your kill zone is at on your chart. And then you're essentially looking for the second chance entry to get involved on the way down. Now, the magic question is, well, put it this way. If you're a trend line trader, your trend line's right there. I mentioned before, I'm not really big on trend line. I'm more of a horizontal support and resistance person. So the fact that we did not break below this level is a warning sign for me. So I'm taking a very cautious approach to this. But if you're a trend line trader, then your trend line is broken. Look for that retest. If you're not a trend line trader, what you want to start doing is identifying your kill zone. And your kill zone is basically the area in which you think price is likely to return to and then reverse off of. And the bigger kill zone that's going to be on my radar is going to be from right here. Our lows at about 113.06. We can call that 113. That's been that magical number, right? 113 all the way to about right here, right below 114. So it's a 100 pip kill zone. Now, I know what you're saying, right? I can, Akil, that is too big. It's too large. How do I know where to get involved within that area? Well, two things. You should be a rules-based trader. Do me a favor, type it in the chat to your right if you are a rules-based trader, meaning that you have a set of rules that you follow to execute your trade, something that is testable, verifiable, and repeatable, meaning that you can test it, meaning that you can verify those testing results, and meaning that you can repeat it over and over again in the market, right? If you don't have those three things covered, I would question if you're actually a rules-based trader or not. But give me a yes in the chat to the right if you are a rules-based trader. Little airplane water, stole a bunch of them. All right, so if you're a rules-based trader, then you should know exactly what you need to attack this. It could be anything from, hey, I need to see an RSI swap, right? I need to see the RSI go directly from oversold to overbought. Hey, I need a specific candlestick formation. I need a pin bar engulfing reversal. I need a double top. I need a 2618. I need diversions, right? Whatever you may need, you're watching this zone. You're saying, if price action gives me, fill in the blank, then I enter the trade. Something else that you want to take into account is going to be risk reward, right? What is your minimum risk reward ratio? And that's going to really be different per trader. Just as your entry is going to be different per trader, so is your risk reward, right? Because we may have a set of traders that are looking for this, right? Let me ask you guys this. If how many of you guys are consider yourself trend following traders, meaning you like to hop on the trend and you play for the extension? Again, type it into the right-hand side of your screen if that's kind of you. And if you don't know, it's fine. Don't type in anything, but just kind of curious. All right, so if you're a trend following trader, you're looking to get involved in this pullback and you're looking to hop on the trend all the way down to really the next level of previous structure support, right? So it's going to be very, very easy for you to get a good risk reward. You may be able to enter, say, right here at market or a little bit above market, have your stops above this kill zone. We'll go ahead and make this red. Red for risk, right? You may be able to have your stops above this kill zone. And because you're shooting for a move down to, again, 110s or whatnot, boom, you can still have a very positive risk reward. Scrunch up my chart. Yes, it's a far ways away, 110. Let's just use this as an example. You can have a very positive risk reward. However, if you're more of maybe a trend continuation trader, which, you know, I would kind of, that's where I fall into things. I'm not a true trend following trader. I do take trending opportunities, but I approach it more cautiously, like a counter trend trader. That's just my philosophy. So if you're kind of someone that takes that approach, you may be looking for targets at a retested structure, right? A very conservative target level. And if that's the case, well, guess what? Probably not a situation you want to be in. You can see that your risk to the upside, right, your potential loss is going to outweigh your potential reward. Now, I'm not saying that you can't be a consistently profitable trader doing this, trading an inverse risk reward. You can, but typically you want to put yourself in a position where in general, typically you want to put yourself in a position where your wins outweigh your losses, meaning the amount that you take home when you win is greater than the amount that you give back when you lose. When you can pair that with a good win percentage as well, and again, win percentage doesn't really matter, but when you can when you can combine that with a good win percentage, you have a very, very, very good expectancy in the market. So if you're someone like this, you may need to wait for either a different entry reason and use a tighter stop that puts you somewhere in here, or if you want to use your stop loss up there, you're going to need a deeper entry in order to kind of make that risk reward work to your liking. Now, one thing you also want to do, or you may want to do, is kind of ask yourself, how can I chop down this kill zone? Is there any place in particular that stands out for me instead of looking at this entire zone, just saying, is there any place in here that I think price action is more likely to react at? And there are a few levels that stand out to me. One is going to be these lows right here. And if we just take a look left, you can see how powerful this level of previous structure support was in the past. Boom, 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 boom. Another level is going to be right in here, right before our most recent drop off. These kind of consolidative levels right before big moves in the market are often pretty important. And for you guys that are familiar with supply and demand, you know exactly what I'm talking about. So those are two levels of my liking right there. Now, to kind of add more confluence to that, we can bring out our Fibonacci tool. So let's take out our Fibonacci retracement tool, and we're going to drag it on from a few different levels, right? And Fibonacci retracement tool, it's not a magic tool, right? I know many people think Fibonacci is this magic thing where I draw it out, I look for this super secret number, and I trade it. Bad idea. I think Fibonacci by itself is a complete waste. However, there is importance to these Fibonacci levels, not just in the market, but in life. And you can make the case to say, hey, well, it's kind of psychological. It's kind of a self-fulfilling prophecy. Well, if that self-fulfilling prophecy works, then it works, and that's all that matters. And, you know, the market is nothing more than a representation of all of our actions as traders. So if a lot of traders are, you know, using these magic fib numbers as levels they're paying attention to, the price chart is going to reflect that. So it's, you know, call it what you want, but I think it's dumb to use it by itself. I think it's smart to already have an idea of what you're looking for and then maybe use it for some confluence, use it for some more confidence. But we can take a Fibonacci retracement from a few levels. We can take one from our ultimate swing high to swing low right here. So kind of the last test of the upper trend line of our wedge right here. You can see I'm gonna have a 3D2, a 50%, and a 618 right in here. Those are the three main levels that I'll look for. Now, if I want to take it from a few smaller levels, let's take this last swing right here, swing high to swing low, and let's just take one more smaller swing right in here. You're going to see that we have some pretty decent Fibonacci confluence at a certain level. If we kind of isolate this level right in here around 113.30s, right, you're going to see that we have a 3D2 Fibonacci retracement from the bigger move. We have a 50% Fibonacci retracement from the mid move, and we have a 618 Fibonacci retracement from the smaller move, all lining up in that same level. And if you're a trend line trader, you can make the case that, hey, depending on how much time price action takes to pull back, that may bring you right into that trend line as well. So I think this is a good level to keep an eye on, about 113.30s. And I think the higher level, about 113.50s, 113.60s, is going to be a great level to keep an eye on for shorts as well. Now, the last question, because we always want to kind of understand entry, stops, and targets before we ever enter a trade. What do we need to understand? Type it in. Yep. Entry, stops, and targets before we ever enter a trade. We want to know if price action plays out the way that we think, where is price likely to go? And I'm just going to delete my charts. I'll just load up a new chart here. Use a different one. Dollar Canada. Good trade on Dollar Canada. Just its target twos has been hectic to try and get. But if we load up our chart here and we just take a look structurally, where are we likely to go to? A main level that stands out for me is going to be right about here. And again, that's that 108. Really just let's round up to about 109 area, right? And you can see right at this level with a few things that recently happened, right? We have price action. Well, let's do this. If we kind of take a trip down memory lane, right? We have price action consolidating at that level. We have price action breaking above that consolidation and retesting that level as structure support, right? It bounced off of it and then went higher. I'll just do it like this, right? Consolidation, right on that line, a break up, retest, finding structure, secondary test right here at structure. We trade above it for a while, come back down, we retest again, it holds, retraces back up, we come back down, retest again, it holds, retraces back up, we finally break through it, right? And then what happens after we break through it? Previous structure support becomes resistance, and we see that hit a few times as well. 1, 2, 3. Once again, we break through it. Price action tested again as support, right? So we have a level where price action has been support, resistance. I call this a structure swap. Peter Brandt, who many of you guys may know, he calls this the ice zone, and I really like that. I wish I was that clever. But I like the name the ice zone as well, because if you imagine this level as a kind of like a sheet of ice over a lake or a pond, right? The sheet of ice on the top is stopping the fish from going up, right? Resistance, resistance, resistance. However, those who are walking on top of the pond, it's stopping you from going down. Support, support, support. So very clever. Me not smart, so I just say structure swap. But that's a good level to shoot for as far as targets. And there are more minimum levels during on the way as well. There's a handful of techniques we can use to get down there. Kind of a one-to-one breakout from the range will put you down there as well. Let me just see if there's a 1618 down here. Boom, 1618 retracement down at that level too. So for as far as extended targets, that's certainly a good place to go. I would highly recommend implementing a trade management tactic as well. For you guys that saw the live room video that we did on Tuesday with the dollar Canada trade, we had a good discussion on actively managing your trade. And what that means is as price goes in your favor, right? As price is quote unquote not giving you profit, because you technically don't have profit until the trade is executed, but as the trade is putting you in a profitable position, start reducing that risk on the back end. And that's how you keep your losses small. That's how you're able to really just become a great risk manager. Now, before you guys that are new, just don't go out and do that. There's a way and there's a tactic and there are rules to doing it. You just can't be like, oh, that looks good enough, let's do it, because then you can sabotage yourself by not giving yourself enough breathing room. You can see the market retrace, take out your stops, run in your direction, and now you're mad because you made the right prediction, you made the right execution, but you're a little bit too quick with managing, and now you sabotage yourself and missed a great winning trade. So there are rules to doing it, but in general, you want to manage risks, especially on trades that have home run potential, very, very, very big rewards. So we'll dig into this more next week as we get into the platform. Again, Tier 1 members, you get this video every day from myself and Jason Greystone. Jason Greystone had a great week. He's actually involved in this trade. He called it FTB. So I know many of you guys found that reason to get involved in the Eurodollar before the breakout, which I'm jealous. I'm jealous, but I can't trade the FTB, unfortunately. So I'll have to wait, and the rest of us traders that do not trade that strategy will have to wait for a secondary opportunity. But we'll bring it to you in the live room. We'll bring it to you in the Trading Edge videos. As always, we'll keep you updated on what we feel are the best trading opportunities on the radar. And real quick, now that on the subject, I had a great message from one of our traders the other day on, which Trading Edge video was it? It was Trading Edge 186. I want to read it to you real quick, because we always talk about how to use these videos, not using them as a signal service or whatnot. And Sergio said this. He said, Akil, before I even, I'll just bring it over to you guys. He said, Akil, before I even listen to what you're about to say on each pair, I first compare and predict based on my analysis as well for this video. Eurodollar almost on point. Pound dollar, I'd rather prefer to wait to see what the market does. The rest gave me new ideas, especially on pound Aussie. And this is how you want to use the video as training. The trader said that, hey, I saw what pairs you're going to talk about in the video. I went ahead, I did my analysis. They didn't do Akil's analysis. I did my analysis. And then I watched the video and compared what you saw to what I saw. And on one pair, the euro dollar, boom, we saw the exact same thing. Win, confidence boost, right? On the pound dollar, I can see what you're talking about, but, and I talked about an aggressive approach on the pound dollar for this specific video. So on the pound dollar, I see what you're talking about, but I would rather handle it this way because this is how I trade. And that's what we teach. We're not robots with trading. It doesn't work. I can give all of you guys a mechanical system that is 100% profitable, and 80% of you would still lose money, 10% of you would break even, and 10% of you would be profitable. That's just the way it is, right? So you have to find a trading style that meets you, that meets your personality. I spoke to a lot of traders at the ball, kind of some of our advanced traders at the ball, about trading being a journey of self-discovery and not becoming successful until you're comfortable in your own skin. It's going to be a future podcast episode, by the way, for you guys who fancy the Trading Coach podcast. But it's so true. And then lastly, he said, the rest gave me new ideas like the pound Aussie. So the pound Aussie was something that he didn't notice before. And now it's like, oh, wait a minute. Okay, that is a good idea. And now this trader can go back to his chart, use that idea not to trade from, but use that idea as kind of a reference on what to look for. And maybe he can find a trading opportunity that meets his rules. And that is Ah, yes, that's what I love. I love seeing this because I see so much of the, hey, when do I buy? When do I sell? Right? These internet traders that are, they have the right intentions, at least most of them do, but they're so lost. So anyway, I'm going to show you a recording of the Tier 1 Trading Royal Ball video. It's about 3 minutes long, so take it in. It was an amazing experience, but I appreciate you guys joining me. I don't know if I'm going to be here next week. We're getting close to the holiday season, and you know, typically there's no real point of trading, right? If you had a good year, you're still going to have a good year, right? If you had a bad year, you're not going to turn it into a good year at this point. You're probably just going to make things worse. So this is a time for continued education. I typically shut off the charts for about 2 weeks and just work on me. A little bit on the education side as well, but mainly work on me, reviewing my year, either back testing, doing some strategy development, stuff like that. And I would advise that you guys do the same. That way you can get a head start on 2019, right? Here's the thing. A lot of people make goals once 2019 happens, and it takes them kind of like a month or so to get going on those goals because they spend the first few weeks thinking of them. Start thinking of your goals now. Start working on how you're going to achieve those goals. And that way, by the time 2019 starts, you already have a running start. You're already that much ahead of the race compared to all those others that are just spinning their wheels. Trust me, that is massive. So do that, take in a video, make sure you subscribe if you're new, make sure you hit that notification bell. That way you know when these things come out, and make sure to share this video, leave me a comment, hit that thumbs up button. It's a massive help. Last year we were voted, I think, number seventh best YouTube channel for trading. I want to get number 1 this year, and I can only do that with you guys. So I appreciate it. Until next time, plan your trade, trade your plan. I hope you guys enjoyed the video. And if I don't see you, have a very happy holidays and have a Merry Christmas and a Happy New Year's.
So I'm Jason Greystone. I co-founded a company called Tier 1 Trading. We created a community, we created the tools that they needed, we structured an education program, and it was much more than just learning how to trade. And we've had people come on the program and they've gone on to do phenomenally well. Tonight is a celebration of building an incredible community of traders who are all like-minded and very, very dedicated to their successes.
I think such a cool thing about Tier 1 is the community. Often people don't have people that think the same way, and it's meeting those types of people that you can get on with who also think like you, and you know, being able to celebrate each other's successes. For Tier 1, I mean, it's transparent. Jason, Kel and Darren put something together amazing, and yeah, it's just the place to be.
Tier 1 for me is everything. It's been a platform to transform the way I interpret the markets. They're the most transparent trading educational company on the planet, so I'm very proud to be a member. The event tonight is fantastic. It's a celebration of year 1 in business for Tier 1. It's a time for the global community to come together to celebrate. Yeah, it's been fantastic.
The message that we're putting out there is for a certain type of person. It's not for a get-rich-quick type of person. It's for a hard work, invest in yourself, invest in your family, really set up something that really can help sustain your future and your future generations.
The support you get from all the way through is amazing. The community is great. Tonight's all about celebrating. I'm finding it a little bit surreal, finally meeting a lot of people that I've conversed with. I'm lost for words. It's just, I still can't believe it's happening.
These guys have a passion for helping other people, but what we've been able to do is amass a ton of people. Each person is driven and they want to succeed, but they also want to put their hand out and help everybody else come up with them. And that's really what I think makes Tier 1 special.
It's been amazing the amount of help that you guys have given to each other, the support that you've given us, and it does not work without you. So real quick, just give yourself a round of applause just for giving me.
With Tier 1, obviously transformed my trading completely. Literally, it's just been phenomenal. My trading has just come in leaps and bounds. Now I can actually see where I need to go with my trading. Being in a community is what actually keeps you grounded as a person. By having people around you that says to you, you know, look, stick to what you're doing, stick to the plan, stick to the system you know and what suits you. That is what keeps you moving forward.
Thank you guys for supporting us from the beginning, for being here tonight, and we definitely look forward to everything we're going to do in the future.